I'm currently on the Ethereum chart, okay? This chart you're looking at right now is Ethereum chart. And then somebody sends a signal to long Ethereum. Now, the person could be looking at different things, okay? There are different, setup, different options that the person is looking at. Maybe price action, maybe support and resistance level and all of that. But at this point in time, if somebody asks me to long Ethereum, there are a few things I need to be looking for, okay? If I bring in my trend line, all right, and I go ahead, I am on the 4 hours time frame. I need to look at it at a higher time frame before, because the trade setup may be on the 15 minutes and all of that. But I need to come to the 4 hours time frame and draw my trend line. Okay, remember, the market can either be in an uptrend, in a downtrend, or the market is consolidating, sideways movement and all of that. Okay, when I draw this trend line, is it sliding up or sliding down?
Slide down.
It means that the overall trend in the market right now, based on the 4 hours time frame, is a downtrend. So there is every probability that this market will continue to go down. Okay, now the way it is now on this particular column here, there is a support around this area. There is okay, this zone here, there is a support around this area. This market, okay, came down and tested this area. All right, then tested it here again with this long wick and went back up to bounce from the trend line. Okay, and then it's coming down here again. It has stopped this area again and is rejecting. So this rejection right here could be an upward movement. And how do you see that? If I go back to the go down to the 15 minutes time frame, okay, if I go down to the 15 minutes time frame, you see that rejection that I showed you. Okay, so it came and touched this level, it rejected it, touched it again, it rejected it, and now the third time it is touching it again and it's rejecting it. Okay, now this rejection could be an upward movement. It could be moving to the trend line here. So there's every probability that this market will move to come touch the trend line again. And coming to touch this trend line, there is equally a probability that it will break the trend line to the upside, or it will come in here and use the trend line as a resistance to come back. Okay, when you draw a trend line that is a downtrend, that downtrend trend line becomes what? A resistance in the market. It becomes a resistance in the market. It means that at this particular area, this market is resisting here. So here it rejected from the trend line, went down, came down again and tested the trend line, it went down again. Okay, and now it has come back to the trend line again. This is the third time that is coming to the trend line. It rejected it again, came down. It has touched the trend line again. This is the fourth time it is touching the trend line. There is every probability that if this market comes down here the fifth time, it will break this trend line to the upside. Okay, it will break this trend line to the upside. So if you are taking this trade, if you are going to long this trade on the 15 minutes time frame, okay, there is every probability that this will go in profit. So when you look at this, yes, you say, okay, okay, now this has rejected this, I will just long the market and then put my stop loss maybe below this level here. All right, so that is one thing. If you once you know how to use the trend line stuff, you are good. Okay, once you know how to plot your trend line in your chart, you are good. You make it to you use it to make a lot of decisions in the market. All right, now let's assume that it was a short trade and that trade was given to you when the market was trading around this area. So another thing I can do is looking at this market is moving up. And if I bring my trend line to confirm that, what happens? I'll draw my trend line from here, okay, to the upside. All right, there may not be enough touches, okay, from the upper time frame here. There may not be a lot of touches on the 4 hours time frame. But if I go down to the 1 hour time frame, you'll see that there are a lot of touches on the trend line. Okay, let that load up. So here you see that there are a lot of touches on the trend line, and what makes a trend line a valid line is when you have a touch up to 3 times. Okay, so here normally when I draw my trend line, I always use the wick. Some persons will tell you don't use the wick, use the body of the candle. I always use the wick. I count the wick as equally a trend for my for myself and the rest. All right, so here the market bounces off from here. What happened? It retraces back, though this didn't touch the trend line, but it went up again. It touches the trend line there, went up, it didn't go that up, it came back again. It's now using the trend line as what? As a support. Here the trend line is becoming a support. Okay, so here it bounces up again. So what I'm looking for is only to take a long trade. So now that it bounces from here, I would have taken a long trade to the upside, and this would have been in profit. Okay, now it came back again to test the trend line. This time around, it didn't do what? It didn't bounce from the trend line. What happened? It broke the trend line. Now, when it breaks the trend line, what are you looking for? You are waiting for a retest. Okay, when the trend line is broken, you are waiting for a retest, which is what happened here. It broke the trend line and came back to test the trend line. What happened again? It now started going to the downside. Okay, the market now started going to the downside. So this time around, you will now bring your trend line again. Remember, I drew this trend line from what? From the 4 hours time frame. So I'll go back to the 4 hours time frame. Now that it has broken this trend line and then retest the trend line and started going downward, what will happen? I will now look for an opportunity to start shorting the market because it has broken my support level, which is this previous trend line. So I'll come down to the highest point here and draw a down trend. Okay, so this trend line is now serving as what? As a resistance. So if, for instance, I missed this point that the market broke this trend line and started going down, what I'm waiting for, now that I've drawn this trend line here, I'm waiting for a retest. I'm waiting for it to come bounce from this trend line and go down, which is what happened here. Okay, it came down, it didn't go to the trend line. This time around, it went to the trend line, this level, and then came down to this level here. Okay, so this area here where it rejected from the trend line, if I go back to my 15 minutes time frame, I would have looked for an opportunity to short here, right? You'll see here that it rejected from the trend line. So here you would have shorted. So when you short from here, you wait for it to continue to go down. Now, when it goes in profit to a certain level and you don't want to close the trade, even when you have made up your mind that it is only $2 you want to make in a day, but once a trend starts going in your favor very well, you don't need to close the trade. You can only remove the take profit level and do what? And implement what we call trailing stop. Trailing stop can be done in two ways. If you want to automate it, use the exchange option that says trailing stop and add up trailing stop. But if you want to manually do that, it means that if, for instance, I enter this trade around here, if, for instance, I shorted a trade, let's say around this area, okay, and then I brought my stop loss above the trend line here, okay, and then my take profit is somewhere around here. If this trade is close to my take profit level, what I can do is to remove the take profit, okay, or adjust it further. Okay, I can adjust the take profit further. And once I do that, what I will now do is to move my stop loss from here to the entry. Okay, so my stop loss will now come back to my entering point. And in this case here, even if the trade goes back and hit your stop loss, you are not losing anything. Okay, you just broke even, you are not losing anything. Now, if the market continues to go up, could go down in my favor, what I can do, this is for manual, manually adjusting your trade. I will now bring the stop loss to my previous take profit level. So it means that if your take profit was around 10%, even if this market reverses and come back to this level, okay, to this recent take stop loss, you are still making 10% in the market, right? So you'll continue to adjust this manually until you are done in the market. And what are you looking for? If I go back to the higher time frame, let's say I go back to the 4 hours time frame. What am I looking for? I'm looking at a support, okay? I'm looking at a support area down here. And then this serves to be a support, all right? If I bring my horizontal line here and I plot it somewhere around here, okay? If you look at the history of the market, you see that this zone here is somewhere that was a support and both a resistance level, right? So the market actually played around here before it started moving to the upside. And what you are looking for, this support line you just drew here, is that when the market broke this line to the upside, it came and retested here. What happened? It went up. It came down again, down here, tested it again. It did what? It went up. Now it is at that point again. So you want to make sure that if you are setting your take profit or you are trailing your profit, okay, it doesn't, you don't trail it more than this level. right? But if you do automatic trailing stop, which you can do on the BYBIT exchange, if you see the option to add trailing stop, you will only see it when a trade is already running. Okay, if you see that option to add trailing stop, it means that whatever condition you have given to the trailing stop, that is what the market will work with. So if I say close my trade when the market retraces by $100, increase or decrease in the market, it means that if Ethereum is at 1,700 and I say when the market moves by $100 or when it decreases by $100, if Ethereum goes down to, let's say, 1,800, my trailing stop will automatically be triggered at that point and the market will close. Okay, so the things you need to know how to use very well is trend line, then how to spot your support and resistance level. Once you spot your support and resistance level, now when you are using trend line equally says, like I said earlier, when we're in an uptrend and you draw a trend line like this one, the trend line becomes a support in that market, meaning that the market will come down and test that place and bounce back, test the trend line and bounce back, test the trend line and bounce back. Then when you draw a trend line in a downtrend, the trend line becomes a resistance, meaning that the market will always come and test that trend line and come back, test the trend line and come back until it breaks that trend line to the upside or to the downside. The trend line or that trend is still very valid. Okay, so basically this is how you use trend line to spot the movement of the market. You can use trend line in any time frame of your choice, but why I like using the higher time frame is because I want to see the overall movement in the market, because this upward movement here that I drew here, or the downward movement here I drew here, if I go to 15 minutes or 5 minutes time frame, it could be telling you that this is a up and an uptrend. Okay, here it is very stable, it's still respecting that trend line, which is a downtrend. Okay, if I go to a lower time frame, for instance, all right, now on the 5 minutes time frame, if I zoom out right here, you'll see that this is an uptrend. If I decide to draw a trend line from here on the 5 minutes time frame, this is an uptrend. Okay, so but I just get the overall trend in the market, which is that the market is currently in a downtrend. All right, so whatever the market is doing right here, it doesn't mean anything, right? So I use the overall, because when you do it on a higher time frame, the opportunity for you to make profit is always very big. All right, the opportunity to make profit for you in the market is very big. For instance, if I measure this, okay, a movement from here to this area will give you around 4%. Okay, that is within how many days here or there, but this will give you around 4%. Okay, if I do this on a 5 minutes time frame, if I do this on a 5 minutes time frame, for instance, let's assume that this, you are looking at this as an uptrend. Okay, the movement from here to here is what, around 0.5%. All right, so when you do your analysis on a higher time frame, you get more opportunity to do what, to see more bigger opportunity to stay longer in the market and make more profit in the market. Okay, I don't know if you understand that. So you see that market is respecting this zone and going forth and back and coming back. Yes, go ahead. The guy that asked the question, I need to know that he's clear with everything I've explained before we take another.
Yes.
Okay, please, the next person should go on with his or her question.